Boeing and Airbus. These names are more than just brands. They represent decades of ambition, rivalry, and technological progress that have transformed how we travel. These titans have defined modern air travel, their rivalry fueling innovation and shaping the global aviation industry. Every new aircraft, every leap in safety or comfort, is a result of their relentless competition. Boeing, the American icon, gave us the legendary 747 and a century of engineering breakthroughs. Its aircraft have carried millions across oceans and continents, setting standards for performance and reliability. Its legacy is woven into the very fabric of aviation, connecting continents and cultures, and inspiring generations of engineers and travelers alike. But recent years have brought Boeing profound challenges, from technical setbacks to public scrutiny, testing the company's resilience and reputation. Airbus, born from European collaboration in the late 1960s, set out to break America's monopoly in the skies. It was a bold vision uniting nations to create something greater than the sum of its parts. With innovations like fly-by-wire controls and the A380 Super Jumbo, Airbus has become a global leader, pushing boundaries in both technology and design. Their competition is more than business. It's the engine of the entire aviation industry, driving progress and shaping the future of flight for everyone. Every airline, government, and traveler is touched by their choices, whether it's the routes we fly or the safety features we trust. As of August 2025, the battle for the sky is more intense than ever, with both companies unveiling new models and strategies to capture the future. The question remains, who's winning and what comes next in this high-stakes race for aviation supremacy? Let's talk numbers. Because in aviation, the bottom line tells the real story. In 2024, Airbus soared with annual revenue of $78 billion and a net income of $5.5 billion. Their strong demand and operational stability have turned order books into real profits. Meanwhile, Boeing's year was turbulent. The American giant reported $65 billion in revenue, but ongoing production issues and safety crises dragged them down. Boeing posted a net loss of $2.20 billion, another year in the red. This loss reflects the cost of disruptions, compensation, and the massive investment needed to fix its manufacturing and safety culture. While Boeing is working to recover, the financial gap is clear. Airbus is firing on all cylinders, while Boeing is still fighting to regain altitude. The numbers don't lie. One giant is soaring, the other is struggling. The stakes have never been higher. Who will come out on top? To truly understand a company's strength and long-term prospects, you have to look beyond just profits and losses. You need to examine its assets and equity. These numbers reveal the real story behind the headlines, showing how much a company owns and how much it owes. Airbus ended 2024 with an impressive $130 billion in assets and $15 billion in shareholder equity. These figures reflect not just the value of their factories, planes, and technology, but also the trust investors have in the company's future. This solid financial foundation gives Airbus stability, flexibility, and the ability to invest in innovation, research, and new aircraft for years to come. Boeing's assets are similar, totaling around $135 billion, but the story takes a dramatic turn when you look at equity. Years of heavy losses, crisis costs, and mounting liabilities have left Boeing with negative shareholder equity, about -$5 billion at the end of 2024. This means Boeing's debts now outweigh its assets, putting the company in a precarious and risky financial position, especially for a business of its size and importance. While Boeing can still operate thanks to ongoing cash flow and its ability to borrow money, negative equity is a flashing red warning sign for investors and the industry. It signals deep financial weakness and vulnerability, a situation that could take years, if not longer, to fully repair and recover from. Airbus, meanwhile, has a healthy financial cushion, giving it the confidence to weather economic storms and fund ambitious new projects without hesitation. The contrast between the two is stark. Airbus stands on solid ground, while Boeing is still digging itself out of a deep financial hole. The financial health of these two aviation giants will shape not just their own futures, but the future of the entire global aviation industry. The big question now, can Boeing climb back to stability and regain investor confidence? Or will Airbus continue to pull further ahead, setting the pace for the next era of aviation? The Boeing-Airbus rivalry plays out differently across the globe, with each region telling its own unique story in the battle for market dominance. In the US, Boeing remains the undisputed leader. American carriers like United and Southwest have built their fleets around Boeing jets for decades, relying on the company's deep roots and long-standing relationships. While Airbus has made steady inroads, especially with its fuel-efficient models, Boeing's home field advantage and legacy contracts keep it firmly ahead in its own backyard. In China, however, the tables have turned dramatically in recent years. Airbus has surged ahead, fueled by massive orders from Chinese airlines and a strategic final assembly line in Tianjin, which has helped cement its presence in the world's fastest-growing aviation market. Geopolitical tensions and trade disputes have made China a tough market for Boeing, with new orders drying up and existing deals facing uncertainty. In Europe, Airbus is the natural favorite, dominating short-haul and regional routes, but Boeing's long-haul jets like the 787 Dreamliner still find success with major carriers seeking range and efficiency. The Middle East is a true battleground, with mega carriers like Emirates and Qatar Airways placing massive orders from both giants, seeking the best aircraft for their ambitious global networks. In Southeast Asia and India, competition is fierce. Low-cost carriers are fueling huge orders for both manufacturers, as rapidly growing middle classes drive demand for affordable air travel. Each region is a chessboard, with airlines as the pieces, and every move can tip the balance of power. The global patchwork of market share is constantly shifting, as new deals, alliances and regulations reshape the landscape. Regional strengths, political alliances and historical ties shape every order, making each contract a strategic decision. The fight for dominance is far from over. Every deal counts, every delivery is watched closely, and the world is paying attention to who will lead the skies next. Deliveries and fleet share are the ultimate scorecard in aviation. In 2024, Airbus delivered a record 750 commercial aircraft, led by the A320neo family. Boeing managed 480 deliveries, hampered by production slowdowns and regulatory scrutiny. This delivery gap means billions in deferred revenue and frustrated customers for Boeing. Globally, the fleet is still nearly even. Boeing holds 48% of in-service jets, Airbus 46%. But with Airbus outpacing Boeing in deliveries, the balance is shifting. The skies are slowly turning from blue to orange. The next few years could see Airbus take the lead in global fleet share. The race is on. Both giants face powerful tailwinds and headwinds. Airbus enjoys operational stability and a popular, efficient product line, especially the A320neo. Their global assembly lines insulate them from geopolitical risks and keep customers close. Boeing, meanwhile, is battling to fix its manufacturing culture and restore trust after high-profile crises. Regulatory scrutiny and production caps are slowing them down. Yet Boeing's engineering remains world-class, with advanced wide bodies like the 787 Dreamliner. Their defense and space divisions provide vital stability. Airbus is riding high, but Boeing's strength shouldn't be underestimated. The competition is fierce, and the future uncertain. The next decade will be defined by innovation. Airbus is pushing for zero-emission flight with its hydrogen-powered Zero concept, aiming for 2035. They're also refining current models for greater efficiency. Boeing is betting on sustainable aviation fuels, targeting 100% SAF capability by 2030. Their transonic truss-braced wing, developed with NASA, could cut fuel burn by 30%. Both are investing in digitalization, using AI, data analytics, and digital twins to streamline design and production. The race isn't just to build better planes, but to build them smarter and greener. The future of flight is being shaped now. Who will lead the next revolution? The greatest challenge and opportunity for both companies is sustainability. The industry is under pressure to cut emissions, and both giants are racing to deliver greener aircraft. New models like the A320neo and 737 MAX are 15–20% more fuel efficient than their predecessors. Accelerating fleet renewal is the fastest way to cut emissions now. Sustainable aviation fuels are the bridge to a zero-carbon future, but scaling up production is a massive challenge. Airbus is betting big on hydrogen, aiming for a commercial zero jet by 2035. Boeing is exploring hydrogen and hybrid electric systems while pushing SAF adoption. The path to net zero is long, but the journey has begun. The ultimate winner may be the one who saves the sky. That's a future we can all profit from.